And hello again. Welcome to Tuesdays with Lloyd's. I'm your host, Pat Talley, Regional Director for Lloyd's in the U.S. In today's special edition of our program, we'll spend the entire segment with Lloyd's Global Chief of Markets, Patrick Tiernan, who will cover a wide range of topics, from Lloyd's outstanding preliminary financial results released last week to the many initiatives underway designed to operationalize the strategic advantages of Lloyd's to unlock new demand and opportunities for the market. Hank Watkins, President of the Americas region, will moderate our discussion today, and we encourage you to submit questions for Patrick via the Q&A tool. We'll leave some time to answer those near the end. And with that, Patrick, Hank, welcome to Tuesdays with Lloyd's. Let's jump right in. Gentlemen, the floor is yours.
Thank you, Pat. Appreciate this very much, and welcome to all of our guests today on Tuesdays with Lloyd's. I'll start off by stating the obvious to everyone in the audience today, which, by the way, Patrick, includes brokers, underwriters, risk managers, industry service providers, Lloyd's Corporation colleagues, regulators, members of the media, and many other friends of Lloyd's. In this uniquely challenging time we live in, where increasing risk and demand for solutions from individuals, business, and government are creating more opportunity for our industry than ever before, there are an increasing number of protection gaps left by wildfire, hurricanes, litigation abuse, and other systemic challenges, suggesting that our industry's acknowledgement of the need doesn't always lead to the delivery of viable, and by that I mean affordable and capacity-driven risk transfer solutions. This has played out in many of the earnings results we've seen in recent weeks, where a return to underwriting and pricing discipline is taken center stage. Now, I want to congratulate you and our London-based colleagues who, under your leadership, have worked with the syndicates over the past several years to essentially bring the market to a much better place. It's been exciting to watch from over here. I'm based in New York, and my colleagues are based throughout the Americas. But the results last week, as Pat noted, preliminary they may be, were at 84% combined ratio, the strongest since 2007. If John Neal were here with me today, I'd ask him this question. Knowing how challenging it is to perform consistently well in a standalone or insurer or reinsurer, which you've both participated in over your careers, how in the world is this accomplished in a marketplace of 56 managing agents, running over 90 syndicates, writing more than 60 classes of business all over the world? In other words, how does the corporation partner with the market to consistently deliver the underwriting results and disciplined growth that most risk takers in our industry now claim to be their number one priority? Over to you, Patrick.
Thanks, Hank. That's quite a long question. But I think, well, firstly, thank you so much for having me. I really appreciate it. I've been badgering Hank and Pat and Mark and the team to get on for a long time. But my schedule hasn't always been the easiest to accommodate. So apologies, but thank you so much for having me. I think, Hank, to try and sum up the question in one word, it's a huge collaboration between so many people. I mean, all the folks you mentioned that are listening in today. But if you think of the collaboration between the corporation, the market, the brokers, the customers, the reinsurers, all the service providers, that's what's needed, because nobody can do this in isolation. It's got to be a collaboration, because otherwise you would destroy so much value on the way through. So I'd sort of frame my answer in a couple of ways. I think, first of all, we've got to be very humble in respects of the impact that we have at the corporation. Firstly, from my perspective, I probably came in towards the end of those very hard remediation years that the team before me, led by John Hancock, had accomplished so much. So I was in pretty good nick 3 years ago when I came in. But the one thing we did do was to turn our lens to the most material things. And we turned a lens to the most material underperformers rather than to the bottom 10% of any individual syndicate, which I think was pretty helpful. The second massive tailwind that I had was that Lloyd's, and under Peter Montanaro and our oversight directorate, our move to principle-based oversight, which is huge in sort of regulatory terms, allowed us to focus on, well, again, what was material and allowed us to differentiate massively between the syndicates that were performing and those that were struggling. And that, I think, is the clue, Hank, because we are so lucky to have some of the best underwriters in the world. In fact, many of the best underwriters in the world operating in our market. And our market works best when we can let folks, pretty much get on with what they're really good at and just sort of focus them on the material issues that need protection from our perspective, systemic risks, risks to the central fund, etc. And when it comes to results, one of the phrases that sort of came up a few times last week that I would use is that when you've got these spectacular results, which to be fair, they were 1 year, but they were pretty good. We announced the results as the corporation, but from my perspective, I would say that I'm the guy holding the camera. The talent is the market. The talent is the underwriters that operate in the market. So I think we're very lucky to have such a strong market in there. And then what do we do when we're at our best? Sorry, my answer is even longer than your question. But what do we do when we're at our best? I think we provide consistent frameworks for folks to operate in, so that everybody it's pretty transparent, it's quite predictable, and it's easy to work within the frameworks that we provide. So we say these are the things that we're focused on. These are the things that require everybody else to focus on, and other things we can let develop. And we try to communicate quite clearly. We try to ensure that there is a glide path to anything that we're bringing in, such that value can be created. I mean, Hank, you know this better than anybody else, but the length of the relationship, or sort of the number of parts in it, from customer through to agent, through to cover holder, through to broker, wholesaler, insurer, reinsurer, final investor. It's not a great. If you're taking an awful lot of handbrake turns, you're gonna cause a bit of damage. So we got to be quite thoughtful about that and creating value. I think the last thing I'd say, Hank, is that as we spend a lot of time looking into the future, so we can again be predictable, and we try to leave a few breadcrumbs in how we talk to folks, so they know what's coming. And last week we had our market messages as well as our preliminary results, and we try in those quarterly market messages to sort of plant the seeds so folks know what's coming and people can kind of see a bit what we're thinking. So I guess that's how we try and do it, Hank.
That's spot on, Patrick. And I know you're in Bermuda. I didn't realize the conference was on a boat. So maybe it's just me, but you're going up and down, which is certainly keeping with our nautical theme. But no, thank you for that. That's really interesting. I've been at Lloyd's, 15 years now, and I've noticed, especially in the last few years, there's been a move from our role as a traditional regulator of the market. Some would have said historically almost a limiter, to a facilitator of growth. And I think we'll get more into this theme as we go on today. And that leads me to my second question. You and our
before I get accused, I'm not on a boat. I think this is the camera struggling to get my good side. So I think it's AI dealing with a bad subject. So I'm not on a boat. I promise.
Okay. But I mean, you and Don Miller, our commercial director, also based in London, recently launched an ambitious multi-year commercial strategy that has our colleagues all over the world focused beyond our traditional, yet still very important responsibilities of providing regulatory, market development, claims, media relations, and other types of support to the managing agents and syndicates operating on our platform globally. Can you share highlights of two of those strategic pillars in our new strategy, both captive syndicates, which is really exciting across the world, and then multinational programs?
Okay, yeah, sure. I mean, I think that's something that we're really trying to blend together. These are sort of bringing your first two questions together. We are trying to work on that commercialization of the Lloyd's market and of what we do. So I would say when I came to Lloyd's, whatever it is, 3 years ago, one of my big discoveries is seeing the number of advantages that I didn't even know existed at the time. And so what we're trying to do is bring those advantages to the fore, and if there's anything that isn't there, to develop it quietly but methodically. And I think that's where captives and multinational licensing sort of fits. So from if I go to captives first, I would see Lloyd's now as from a structuring perspective. If you're thinking about underwriting, structuring, matching underwriting and risk with capital of all different sorts, syndication, etc. The ability that and the flexibility at Lloyd's is incredible. I mean, I think it's second to none. One of the things that was possibly missing was the ability to structure captives and have captives as a link. I think that's where it works at its best, Hank, as a link. You know, in the first instance, as we think about traditional captives, a link between large customers and coming into passing on risk to insurers and reinsurers. So I think that is a material part of what we're trying to build there. Something that's pretty neat. I mean, it's not for everybody. It's not for sort of corner shops, because you kind of need to need Lloyd's capital and Lloyd's fronting capabilities. But I think captives as a risk structuring tool at that sort of more complex end will be fantastic for some big customers, some international customers in the next couple of years. But also it's a really quite a neat tool for both insurers and reinsurers as they think about what they want to keep and what they want to pass off and how they want to remain flexible in different types of markets. And we saw that a little bit at the sort of 1/1/2023 renewals, when people were sort of cut a little bit short or a little bit, where markets were a little bit less orderly than usual. Having the ability to structure through captives is pretty important. So I see captives coming in at quite niche areas, but in pretty cool ways going forward, and keeping more folks in the market, I think, for longer. Multinational is actually much simpler, Hank. I mean, people talk about the advantages of Lloyd's in terms of the captives, the capital, and the flow of business. But the licenses are a huge big thing as well. And Lloyd's has, I think, over 100 insurance licenses and about 80 reinsurance licenses. And so I think we have been a little bit slow to knit those licenses together for the benefit of customers, brokers, and insurers who are dealing with customers who's got, I don't know, 3, 4, 10, 15, 20 different countries that they need cover for. And the brilliance of the Lloyd's licenses is that they're all knitted together. So you only need maximum of 3 policies, one for the US, one for Europe, and one for the rest of the world, which, limits all of the headache for both those who are issuing, covering, and being covered. So less paperwork, less gaps in cover, less Dick Dill covers, etc. And it really, I think done well, when we roll this out over the next couple of quarters, I think Lloyd's could be the premier multinational policy offering that we have out there. And you put that together with all of our capability from a reg and from regulator, sort of our governmental influence and our governmental close ties, it really puts us in a pretty cool spot. So I really like the multinational offering as well.
No, that they're both really interesting, Patrick. And Lloyd's has for decades been one of the key players in the reinsurance of captives and risk retention groups, particularly here in the U.S., where RRGs are pretty common. It's interesting now to see us take a different approach, as you say. And we're actively at different conferences throughout this first half of the year around the world, out promoting the concept of Lloyd's captives and getting a lot of interest from some of the major businesses, companies, if you will, in the world. And then multinational is fantastic, right? A lot of my career in that world, and it can be pretty complicated to deal with each country separately, whereas the Lloyd's abilities to write master policies that don't require a local policy in many cases should be, once it's all rolled out, a real benefit to everybody.
Great.
So quickly, I never let an opportunity go by without mentioning the Lloyd's Lab. It's pretty exciting. It started back in 2018. Actually, our first ever Tuesdays with Lloyd's session in 2020 highlighted one of the lab graduates, Parcel, and we
Oh,
have
yeah.
John Neal with us, right? So it's been a tremendous success over the past 5 or 6 years. We're currently in cohort 12. The theme of that is resilience in the Americas. I just wanted to ask you, as you come across lab alumni, as you spend time with many of the brokers and underwriters in London who've been terrific mentors over the past 5 years, what's your sense of the way innovation is going at Lloyd's? We haven't always been viewed by some as the most innovative market at times in our history, but I got to tell you, looking at the lab, what they're coming up with, it just is broadly very, very successful for ourselves and also across the market in general, not just Lloyd's, but throughout the world. So what's your take on that?
Yeah, I mean, I think those some that you mentioned are wrong. We are an innovative market, and I don't subscribe to the fact that we're a market of last resort. We're a market of firsts. I mean, it can't be coincidence that we're first motor policy, first airline policy, first space policy, first cyber policy, first D&O policy. We're a market of firsts. Just because you come to us last, that's just because we are slightly further geographically down the chain. So I see us as constantly innovative because of the people who work within the ecosystem of the market. And I think Lloyd's Lab is a good example of Lloyd's at its best, where it is weaving the future, the past of the market together to think about, the present and the past of the market together to create solutions for the future. And the other great thing about the lab is it's massively intergenerational. It's very it goes beyond the traditional insurer broker relationship. You've got multi-dimensions of the relationships there. It's led by a very young and innovative group of people, and why I think it can be celebrated so enthusiastically is because they produce results. I mean, I think they've generated, Parcel's a great example, but there's plenty of others. They've generated 1.2 billion of investment. They've generated hundreds of millions of premium. 1,100 jobs, over 100 alumni now out the other side of this. And I think Lloyd's Lab now has a little bit of international recognition. In no small part due to the launch in New York. Was it last year? Yeah, late last year. What they've done in Brussels, what they've done in Asia Pac. More to come on that maybe later this week as to where we go next. I mean, I think they've done just a super job, and it's Lloyd's is the badge on it, but it really is the market coming together, and that convening power of Lloyd's being hitched to the wagon of the innovators to come up with pretty cool stuff. I mean, you mentioned Parcel. I mean, one of my favorite stories from there is the wildfire defense system folks, who came into the lab as in one of the cohorts, and they've sort of graduated through now. They'll have their own syndicate, fighting fires, and you talk about protection gaps, Hank. I mean, I think in the conversations I've had with you at WSIA and CIAB, there's big ones on the coast of the US, right, and fire in California, and having a lab graduate head out there and prosper and really sort of doing great things for folks. It's a pretty neat story.
Yeah, and not to be completely U.S. focused in this conversation, but you look at severe convective storms, inland flooding, which are much more significant now for Lloyd's and the global insurance marketplace. The parametric triggers that can be evolved into providing true claims service that's a lot quicker and more meaningful than the past. A lot of that's come out of the lab too.
Completely. And I think, one of the things that we've got to be really careful of when we talk about results, certainly in-year results, we've got to remain relevant to customers, and it's been tricky for everybody involved in this, sort of raising prices year on year. But I mean, it's had to be done. The returns weren't there, inflation in the system, loss cost inflation, etc. I think the way the lab takes on customer challenges, sort of thinking about what is critical to customers right now, keeps us with that point of relevance and never lets us become too removed from those who we serve. So I think it just has so many positive points, and they can be replicated in other parts. As we think about the energy transition and energy challenges and energy security. I think you can be a little myopic or a little bit, opinions are pretty strong in those areas, but there's problems that got to be solved. People need to have their homes heated. They need to get from A to B, and I think bringing folks together in a secular way is a pretty good way to attack those problems.
Absolutely. Carbon sequestration is top of mind in the lab. We have the graduate of the lab, Kita, which spends time in our New York office here. They're in the business of carbon credit protection. So it's really cool. And I do always say to any audience I'm with, especially the younger folks, of which I'm not one, this is the best time in anyone's career to be in this industry. And if you have a little bit of InsurTech in you, you've got friends, family members who are in that area and just want to try it, come talk to the lab. We have twice a year these cohorts that we send out applications globally on, and you may get a chance to pitch, you may get in. And if you do, then that's a huge stepping stone to the rest of your career. So just keep that in mind, right?
Yeah, I think as well that if you are that way minded, and I wish I was, but I'm not. But the amplification of what you can achieve by not just the lab, but actually insurance in general, if you have that altruistic or vocational feel that I know some of us do share in Lloyd's, the ability to amplify your impact is phenomenal from our market. So that's another call out for it.
Absolutely, Patrick. So last question before we move on to questions. There are a couple that I see that have come up before we head off to have this conversation uploaded to our YouTube channel,
Sure.
which ever, for better or for worse. We've got about 70 now in our archives from the last 4 or 5 years. So encourage people to go look at those by class of business, by underwriter, by risk manager, you name it. We've got people in there. Love to hear from you. In your experience over the past 3 years or so as chief of markets, what's been the most memorable or surprising experience you've had at Lloyd's?
I'm not sure I'm going to put surprising. It's because permanent record of my biggest surprises probably would be career limiting. But I think the numbers and the results get logged and maybe forgotten over time. But the relationships and how we made people feel and how other people made me feel as I came into it is probably what will survive longer in the memory. So I think what I'll remember is the extraordinarily generous acceptance of me coming in as an outsider into Lloyd's, into the US wholesale market, which I hadn't spent a lot of time in before. Everybody was very kind and accepting and gave you a chance and sort of their welcome, and hopefully that's been returned by listening well and actually delivering things that are meaningful for folks and their businesses, and closer to home and closer to my own heart. The folks in Lloyd's, the corporation and markets specifically. I know I'm not the easiest to work with, Hank, but I know I sort of drive a pretty intense schedule for everybody. But I hope that we've had a good 3 years working together. We've done an awful lot together, and we've allowed people to flourish. To sort of grab opportunities, run with them. Give them a chance when people sort of trip up, we pick them up and help them on again. And recent example of that, Hank, was when we were down with your team in Miami. You see sort of a great diverse bunch of folks coming through doing great things. And hopefully that's because we've created an environment and a culture where people can reach those sort of career highlights that they've set for themselves. And I think it's similarly in London. We've got and around the world, we try and keep a pretty open door policy. We try and have pretty open chats, and hopefully it's working well enough, Hank.
Well, thank you, Patrick, and we appreciate all the travels you've undertaken across the world to see everybody, and it's really, really helpful to all of us. And the global network has been closer together with London than ever before.
Yeah.
On the note of coming to London to visit, the underwriting room is open. The first floor is beautiful, brand new. The second floor is coming as far as redoing it. The lab is on the fourth floor. Just a quick juxtaposition from that lost book right by the rostrum, which is where the lutein bell hangs. So you're going back centuries in your mind as you're reading losses in the marine business that come in every day and are scripted out in longhand. Then you take your glance up to the fourth floor, there's Lloyd's lab. So there's no organization in our industry that has greater contrasts, yet brings people together like the Lloyd's market. So,
yeah. And it's got, I don't know, Hank, about the last couple of times you've been there, and we're really, really conscious of being very hospitable hosts, but there's a good buzz back in the place, right? I mean, I love when you go down to the room and it's, you get that feel. And I've said this to folks before. I'm a bit of an early riser and a late finisher. I think maybe I'm just a bit slow at doing my job, but I walk across that marble every day when I'm walking in and walking out. I think it's just a pretty special place. You can feel history there, and it's quite an inspirational market to work in. So
it is. It's brilliant. The buzz is back. You're right. So I've got 3 opportunities for you to sing for your supper. Not that you haven't already today, but we've got a couple questions here. So the first one that came in. The 84% combined ratio is great, and just wondering if there are areas in the market writing certain classes of business that are not performing well. What's being done to lift them up, to correct them, if you will?
So I think there's, when I was doing the market message last week, we talk about big areas of property and casualty, which we have to get right because it's such a dominant part of the portfolio. And there'll be a couple of geographical idiosyncrasies among those big behemoths of the book, but they're in, property's in decent shape, and casualty we've got the right focus on to ensure that we don't let loss costs get away from us, particularly in the US, where we've got legal system abuse. I think is probably the better term for it these days, rather than social inflation. Among all of the other specialty classes and among all of the other geographies, different bits sort of perform to different rhythms. Everything doesn't perform in unison. So not everything is supremely profitable at the moment. I mean, I think there's areas that have certain challenges. The aviation markets is still coming through. The Ukraine situation. So I mean, that's not settled and done yet. So that's one that we keep a focus on. I think all of the areas that are exposed to geopolitical vagaries, such as political violence, terror, trade credit, political risks, they are under quite a lot of heightened risk factors at the moment. So I think performance has to be taken into account with the pretty difficult volatility that's in there. But I don't think there's anything that's causing us massive stress. The area that we spend a bit of time on, notwithstanding the results are pretty positive, is cyber, because of the speed that market is growing. So I think, Hank, it would be wrong to sort of say there's anything that we're going after in particular, but there's nothing that we don't have a little bit of an eye on at all times.
Yeah, absolutely. That's part of job one at Lloyd's, isn't it? Making sure that profitability and discipline is retained for the long.
If I can answer a question that I'd rather answer, it's what else are we doing to make sure that there isn't anything left on the table? I think Kerry Bond in the US talks very eloquently about this. I don't think we're as efficient as we could be in terms of how we manage claims TPAs, in terms of how we manage some of our files and the legal costs that come through in that. And I think we're going to have to, have every part of the machine working to its optimum, because that's how we deliver value and relevance to customers. So I think there's areas to work on there, and certain areas of the delegated book that we keep a withered eye on, just to sort of say, well, is everybody's interests aligned?
Yeah, you wouldn't know this, Patrick, but Kerry is up April 30th on Tuesdays with Lloyd. So speak about alignment, right? That's great.
There you go.
We have a couple more minutes here. We're going over a teeny bit, but hopefully that's okay for the audience. A question here is Lloyd's relationship with MGAs. We call them cover holders globally. There are about 4,000 binders around the world, close to 1,500 in the US and Canada, sprinkling in the Caribbean and a couple in Latin America. Basically, the question is, given those critical relationships we have with MGAs and wholesale brokers, can you speak to any developments in that area? And what is Lloyd's doing to enhance its offering to cover holders? So that's about 40% of our global business, I'd say.
Yeah, $30 billion.
Yeah, big deal for us. Yeah,
yeah. So I think again, through great collaboration from between London and the global network, I think we've kind of grown up and matured a bit on this in the last 3 years, and actually realized what's needed from both sides. Sort of sweeping statements of delegated is X or delegated is Y. It doesn't really work very well. So if we sort of break it down, I think we have matured pretty nicely in the oversight of that. I think we're realizing, where oversight is additive and where oversight is duplicative. And I think Jane and Peter and the team are doing a great job in trying to sort that out. We've got some tech issues as we look forward to ensure that the tech that each of the insurers and some of the MGUs are using fit nicely into Lloyd's. And I think we've just got to be a little bit less religious on what it is we need, like focus on the data and the information that we need rather than the systems we need, and work on the APIs working better together. And then from a performance perspective, rather than treat the whole book as one, to actually be an awful lot more refined and thoughtful about how we look at delegated performance. And that's what Stuart Spink, as part of Rachel Turk's underwriting team, has been doing. And the gang was over in Arizona last week. I think, I'm not sure if you were there, Hank, but I know a lot of folks were. Listening and getting a good vibe of what's needed there has been important. And we've made mistakes over the last couple of years. I think we recognize that there's areas where we can be better. I think we're working on some tightening up of anti-fraud measures, which I think will help the industry there. But we're going to be working pretty good in terms of sharing an awful lot more data back, and just be more thoughtful that there's more than one way to skin a cat. So I think we work well with our wholesale colleagues. I think we work well with the MGA associations, be they in the UK, the US, Canada, Australia, etc. But we're always learning, Hank. I think that's a job that'll never be done.
Absolutely. And everyone knows now more than ever where to find us when they have questions that are outside of the conference cycle.
Yeah.
And very good opportunity there to keep growing together. And the final question, it sort of is along the theme of what we've talked about. You mentioned some interesting initiatives, Patrick. Where will Lloyd's focus be going forward? And what is required to continue the market's recent success? And we certainly are going to grow in a big way through all these initiatives we've been talking about. Maybe just if you could reinforce that in your final minutes, and then we'll hand it back to Pat Talley.
So I think for me, Hank, and the team, performance will always be our number one priority, because I think a well-performing Lloyd's market is in everybody's best interests. And you and I spoke about this before. I mean, compared to my first year going to CIAB with you, then last October, when Lloyd's is on the front foot, the market just sort of feels in better shape, and we can kind of tackle bigger issues. So we're not going to give that away. That's just not going to happen. From where the growth comes from, I said it a little bit in the market message last week. We'll look forward to demand and try and predict where the market wants to go, but the market will drive the growth rather than us. I mean, I don't think that's really not our job. And if we can get comfortable that what folks want to do within the frameworks that we set works pretty well, that's fantastic. I do think a market that has all of the best underwriters, the best brokers, the best producers motivated to take on the biggest challenges is what will bring structural growth to the market. I think that's a great thing. So I don't set top line numbers. That's not what I do. But I think we good partnerships and good listening to each other, and just a recognition that we can't have growth for growth's sake should put us in pretty good stead. But I think we've put ourselves in a position where we can be a bit more thoughtful and a bit more risk on, particularly in new areas where where Lloyd's can be great.
Absolutely. No, it's very exciting, Patrick, the future. Appreciate you being with us. It's great being with you today. And of course, this will be on our YouTube channel. There's been a lot of entries in the chat by Mark Rector talking about different initiatives, boot camp, Lloyd's results. Here's something else that's just come up. So feel free to go back and play around with that as well. But Patrick, this won't be the last time, certainly, and it won't be 2 more years. So thank you so much. Safe travels to you. And now I'll hand it back to Pat.
And can I just say, Pat, before you jump in, that the green tie is on for St. Patrick's Week this week, so culminating on Sunday. So that's why I've got the green on.
Great touch. Absolutely. Thanks, Hank. Thanks, Patrick. Yeah, that'll bring us to a good spot to wrap up for today. Patrick, seriously, thank you so much for taking time from your schedule to join us. And Hank, many thanks to you for guiding our discussion. And that will do it for this, our second episode of 2024. We hope today's content has provided you with a strong understanding of Lloyd's forward commercial strategy. Be sure to join us for next month's episode, as Hank mentioned, on April 30th, when our focus will be on claims. Nothing is more fundamentally important in the insurance equation than the reliable payment of claims. And of course, Lloyd's record in this respect is remarkable, having paid every valid claim for over 3 centuries. We'll be joined by U.S. Head of Claims, Kerry Bond, who will discuss how Lloyd's is harnessing technology to speed up claim payments. Please do take a moment to answer the survey questions that will appear in your browser as we close today's session. And we're always open to hearing from you on any other thoughts you may have, including future topic suggestions. Drop us a note anytime at usevents@lloyds.com. And so until April 30th, as our tagline says, let's keep staying connected. Take care and have a wonderful rest of your day.